As the quarter comes to an end, what does that mean for markets and money, particularly as we begin the month of April? That's coming up on 3 Minutes on Markets and Money. As we wrap up the last day of the quarter, markets have had a tremendous rally. We talked about this yesterday. A 10% rally from the recent lows has really given a big boost to stocks here over the course of the last couple weeks. Now, we've seen a lot of the movement in stocks now going back into the most speculative names. Names like AMC, GameStop, a lot of the most shorted stocks in the markets have had the biggest rallies over the course of the last 2 weeks. Not surprising here, but that's also kind of in line with what you would expect still in a bullish market. Because again, when you're in a real bear market, and this is what a lot of people have been talking about, it's like, oh my gosh, we're in a bear market now. Not really, because there's too much bullish sentiment still in the markets. People still wanting to chase speculative stocks. In a bear market, nobody wants to own anything, but that's where we are currently. Now, markets have had a very large rally here. We're now 2 standard deviations above the moving average, as we talked about yesterday. As we enter the month of April, though, market statistics tend to be positive for the month. Out of the last 15 years, about 14 of them have been positive. So again, the month of April tends to follow through with what happens in the month of March. But again, that's not necessarily a guarantee. That's just statistics. With markets very elevated here, a pullback to support here would not be surprising. And if the markets can continue to consolidate along the 200-day moving average, that'll allow this market to work off some of this very overbought condition that we're currently in. If markets can do that, that would then set the markets up for a rally back ultimately to all-time highs in the month of April, potentially May. Now look, statistics are certainly one thing. Market environments are a very different thing. As we move into April and May, the Federal Reserve is going to be hiking rates. Monetary policy continues to tighten. Interest rates and inflation are still weighing on consumers, and liquidity is now reversing really across the board. So as we start to get further into the summer, a lot of this economic impact from tighter monetary policy will start to manifest itself inside of corporate earnings and profits. So again, as we get into the reporting of the first quarter, in terms of earnings, it'll be important to pay attention to what companies are saying about future quarters as inflation begins to impact profit margins. Now, with stocks very overbought, let's take a look at bonds. As we discussed yesterday, bonds are very oversold as opposed to stocks and are back on buy signals really kind of now across the board. We're starting to see a better improvement in the technical underpinning of bonds as they've been bottoming here and starting to turn up. Now, if we begin to see a rotation or a risk-off move in markets, we're going to see bonds continue to perform better. And this should actually be the case as we get into April and May. As the Fed starts to hike rates further, we're going to start to see some deterioration in economic growth. That's going to start to push money back into the longer duration bonds for a risk-off trade. So don't ignore the fact that bonds are oversold, stocks are overbought, and there is a potential for a market rotation here over the next couple of months. We'll keep you up to date on that as we enter the month of April. That's 3 Minutes on Markets and Money. We'll see you next time.